December 2025 Fed meeting. Why the US entered a pause zone. The Federal Reserve just delivered one of its most important decisions of the year, a rate cut that may also be the last one for a long time. What changed? Why did the Fed cut rates again and still warn that more rate cuts may not come anytime soon? Let's break down the December 2025 FOMC meeting in simple language. The decision. What did the Fed do? Rate cut 25 basis points, new range 3.50% to 3.75%. The Fed made two major decisions. First one is 25 basis point rate cut, new federal funds rate 3.50 to 3.75%. This is the third cut in a row. September 100 basis point, November 50 basis point, December 25 basis points. Total cuts since September is equal to 175 basis points. Second one is a separate balance sheet move. The Fed will restart purchase of short-term treasury bills, which is worth $40 billion per month. This is not QE purpose, just to keep banking system reserves at ample level. Why? Because market interest rates like SOFR were rising too close to the Fed's upper bound, signaling reserve scarcity. This is the same technical issue the Fed faced in 2019. So the economic outlook SEP summary of economic projections. What is coming in 2026? Here is what the Fed now expects. Growth in GDP 2025 1.7% approx. 2026 upgraded to 2.3% higher than the earlier 2.0%. Why? Because the 2025 government shutdown slowed Q4 growth, making 2026 mechanically stronger. Unemployment ends 2025 around 4.5%, drifts slightly downward in 2026 4.3 to 4.4%. Inflation 2025 PCE inflation is around 2.9%, 2026 2.4%, returns to 2% thereafter. Core inflation follows a similar path. Powell's key message, press conference breakdown. So, what are the Powell's signals? Powell sent several clear signals. Neutral policy zone reached. The Fed has now cut enough to react to what Powell called a neutral stance, meaning interest rates are neither stimulating nor slowing the economy. Powell, we are well positioned, a very clear hint that the cutting cycle is pausing. Risk have shifted, means risk to employment increases, risk of inflation also increases, but for different reasons. Inflation risk come mainly from tariffs. Employment risk comes from a gradually cooling labor market. Two officials formally dissented, several others soft dissented. Tariff, the main reason inflation stuck above 2%. Good inflation has re-accelerated in tariff-heavy categories, but service inflation continues to cool. Powell's view: tariff cause a one-time jump in prices, not a long-term inflation spiral unless wages and expectation adjust upward. Ex-tariff inflation is already close to 2%. No preset path, January cut uncertain. The Fed added new wording. Consider the extent and timing of additional adjustments. This is Fed speak for. We are going to slow down and watch the data. Markets understood this as December is dovish, but January or March cuts are not guaranteed. Labor market slowly cooling. Employment slowing but stable. Unemployment around 4.4 to 4.5%. Job growth is slow but still positive. No signs of recession yet, but risk of have increased slightly. This gradual cooling is one of the reasons the Fed cut again in December instead of pausing. Why cut in December instead of pausing? Powell gave three main reasons. Labor market is cooling steadily. A small cut helps reduce pressure and prevents unemployment from rising too fast. Fed believe tariff inflation is temporary, so they feel safe trimming rates modestly. Want to land near neutral as risk balance out. This was likely the final cut before a long pause. The market reaction. Market a dovish cut but hawkish tone. After the fresh conference, market removed almost all expected 2026 rate cuts. Expected 75 to 100 basis points, now just 25 to 50 basis points. 10-year treasury yields jumped partly because stronger growth outlook means AI plus capex boom, fiscal stimulus, Fed no longer in aggressive easing mode. Investors now expect the Fed to hold rates steady through most of 2026. So simple summary, December 2025 FOMC in a nutshell. Fed rate cuts by 25 basis points, now at 3.50 to 3.75%. Total cuts since September 175 basis points. Restarted T-bill purchases, not QE. Inflation trending lower except for tariff-driven goods inflation. Labor market cooling but stable. Fed has likely reached neutral. Further cuts will depend entirely on data. Markets expect a long pause in 2026. The December meeting marks the end of the aggressive cutting cycle and the start of a wait and see phase. So conclusion, the Federal Reserve ended 2025 with one final rate cut but a very clear warning. The easy part is over. Now the Fed will watch inflation, tariff and the labor market closely before making any more moves. So if this helps you understand the December 2025 Fed meeting, hit like, comment. Do you think the Fed should pause or cut more in 2026? And subscribe for more clear, simple economic explainers. So thank you.